value of the dollar varies by state, by www.forexconspiracyreport.com. It turns out that the strong dollar, as seen by exporters, is not really strong everywhere in the USA. The value of the dollar varies by state, according to Bloomberg Business. How much has the dollar appreciated? That depends in which of the 50 U.S. states you ask the question. To the global audience, the U.S. currency appreciated about 11% last year against a large group of major trading partners. But the Federal Reserve Bank of Dallas has compiled data to create a map of the dollar's trade-weighted performance state by state, and the differences are striking. In Florida, it rose just 3% last year, compared to more than 14% in the Dakotas, where exports to Canada were hit by slumping commodity prices. The strength of the dollar really is putting a lot of stress on a lot of exporters right now, more so in some states than others, said Keith Phillips, senior economist at the Federal Reserve Bank of Dallas. Exports account for some 14% of U.S. gross domestic product, with shares ranging from less than 1% in Hawaii to about 25% in Louisiana. One showcase of diversity within the U.S. that affects how monetary policy trickles through in different regions. We have written about how a strong dollar can hurt U.S. exports in our article, Who Gets Hurt by a Strong Dollar? The Federal Reserve Open Market Committee meets on December 16th and will most likely raise interest rates for the first time since June of 2006. Higher interest rates will tend to drive the U.S. dollar higher against other currencies. One byproduct of a stronger dollar is that U.S. products become more expensive in foreign markets, which tend to hurt U.S. exports and exporters. But some states get hurt worse than others, depending on what they are exporting, whom they are selling to, and who their competitors are. Thus, the economic effects of a strong dollar on the U.S. economy are selective and scattered. This is especially important in an election year when the state of the economy drives voters' choices. U.S. Federal Reserve. If the strength of the U.S. dollar is a problem, then the troublemaker is the U.S. Federal Reserve. Will the Federal Reserve raise interest rates and drive the dollar higher in 2016? The Motley Fool weighs in on the question. One of the biggest questions on the minds of bankers, business people, analysts, and commentators over the past 2 years concerns whether or not short-term interest rates will normalize, that is, increase from where they are today to between, say, 3% and 4% at some point in the near future. But while many people seem to believe that rates will approach these levels soon, there's historical precedence to think that they could stay low for much longer. The Fed has stated that they will only raise interest rates when they believe they need to stave off inflation, and only when doing so will not choke off the recovery. As such, it is unlikely that rates, and by extension the value of the dollar, will rise much this year. But the value of the dollar will continue to vary state by state anyway. For more insights and useful information about Forex markets and trading, visit www.forexconspiracyreport.com.